So one of the strategies that I've successfully employed in the past is to try to take advantage of the hype and run up that pharmaceuticals, these small cap pharmaceutical companies have going into their PDUFA dates and the subsequent receiving approval, a lot of times receiving a bump in stock price after approval, but the reality of needing to convert this approval, this hype, into now subsequently selling your drug and creating revenue, people begin to realize that you got to raise a sales force, you have to have raise money and capital to do this, and a lot of times this is done through dilution and often leads to subsequent rundown or decrease in price after this event. There's a number of reasons behind this. Each time they're individual reasons, but usually stocks that have gained significantly going into these drug approvals subsequently run down afterwards. And this is highlighted in some of my research where you can see, 1 week afterwards, on average, they're going down about 10%. 2 weeks 13%, and after 4 weeks almost 15%. To support this strategy, obviously this is cherry picking, but I wanted to highlight a couple of stocks that have previously worked well for me. One of these, and this is going back on some older examples, if you look at 2011 here, stock was Mankind. They had an aerosolized insulin that even 9 years later still is not regularly used as an insulin regimen in clinics. Most people knew this would not be prescribed. There were a lot of red flags leading into this, but basically right around here you see this run, and really this one was quick. Over the course of a couple of days it significantly dropped. Then at this point the founder and CEO, who is a billionaire, a guy who made a lot of his money investing in stocks, said he wasn't going to invest further into this project, and it dipped even further. Interesting also to note, the stock was not trading at $45 at that time. It was actually around $4, but they've done a ton of dilution over the course of 9 years getting to this point, where as you can see, even before this big drop here that I was talking about, and now this stock again trades at $1.50. Another strategy of this happened the following year. This is in 2012, the stock of Marin that subsequently has found some success with their concentrated fish oil to reduce triglycerides for patients with elevated triglycerides. They've shown that it does actually improve cardiac outcomes. But again, even with drugs that work well, people know that these companies that don't have the infrastructure to sell a drug will need to hire sales reps. And to do so, they're going to have to raise money. They're going to have to dilute the current shareholders. And so this stock ran up to $15. Subsequently, it went down, touching here in the $11 to $10 range. And again, if you zoom out on this, you'll see it bounced around, but where you see ultimately it ended up settling down in the twos 3 to 4 years after that initial approval. And finally, another stock from that summer 2012. This is Vivus, another drug that clinicians were not too keen on, but it did gain approval. This was for obesity, essentially a weight loss pill that ultimately has not been well adopted by the physician community. But again, it ran up to what at that time was around actually $15, even though it says 300 here. But you'll see for this, this had a 30% decrease here, and even touching down here, going essentially from what this is reads as 290 to 200. And then zooming out, you'll see what I mean in terms of you see this giant spike here with approval that they got, and subsequently over the course of the next 8 years or so, they've gone down. Now, obviously, the strategy doesn't work with every single FDA approval, and that's why you don't see as dramatic decreases when you look over an average after drug approval. But it is something to point out, and when you do see significant increases after approval on stocks, especially those that are entering a crowded market, or the data may not have been as compelling in terms of being able to turn physicians to prescribe it rather than just needing to show safety for approval like the FDA generally has done in recent years, there is an opportunity to ride the stock down by buying puts or shorting the stock. Now, I bring all this up regarding the history of stocks running down after they receive approval for a drug that may not be either prescribed as much or may have just some barriers to being sold, and or a company may be low on cash and needing to raise money, and thus they're going to have to dilute their shareholders, thus driving down the stock price. Because I think there's an opportunity coming up on Tuesday, the day after Memorial Day, where this happened because on Friday, company EVFM Biosciences, this company had a drug approved essentially for contraception. And there are a couple things that I've detailed on Twitter just regarding why I personally think that the drug at least has a very uphill battle in terms of making it to market. While I think it's always good that there are other options for contraception, I think that there could be some difficulty here. A couple things in that it's pretty expensive if you're paying out of pocket, $275. It's a very competitive space. There are a lot of other contraceptive options that are more efficacious. This is only 86% efficacious over the course of 7 cycles. Additionally, there's adverse reactions to this drug. 18% of the women had vaginal burning, 14% had vaginal itching, even though only about 2% in the study discontinued use because of those symptoms. It's important just to note also that there were some urinary tract infections, and additionally too, when things are in a trial, people are incentivized to stay in, and just because people weren't discontinuing in the trial setting doesn't mean that they'll have a higher discontinuation rate in a normal setting. Additionally, having to discuss these issues with a patient in terms of the potential side effects that may also turn off a patient to this particular use of contraception, especially when there are many other options on board. So it's a competitive space. I think there is some opportunity in a very niche market for this drug, but I think in terms of what we're seeing in the market and sort of the hype that's building for it, I don't think they quite align with what ultimately will bear out in terms of their ability to generate revenue from it. This stock went up to 8. It's at 8.05 most recently after hours. It closed the day at 4 p.m. at $4.99 before the approval PR went out and really just jumped. So if you look overall, the market cap, about $250 million already. It appears before jumping up to $8. And, a $500 million market cap is fairly significant. Additionally, it's important to remember that right now this company has no revenue. They do not make money from any other products, and they're going to have to hire a sales force. This is not sort of a niche or orphan drug that's only going to a couple patients, but it's high priced. It's going to take a large team to be able to really see significant market uptake and be able to enter the vernacular of OB/GYN physicians who are educating their patients on contraception. So the other thing to note in terms of the assets that this company has, they spent about $13 million from the end of year 2019 to the end of March 2020. They have about $10 million left in cash, meaning their runway really won't last them through end of June for the second quarter. So really they're going to need to raise money. A lot of times when I see stocks where the price of the stocks jump significantly, this is a drug that is going to have some resistance to generate revenue. It's going to require a large sales force to generate revenue if they don't have a partnership, and they're running out of cash. I think there's an opportunity here to short the stock. And so a question that you might be having is, how do I short this stock? And for a number of reasons, I don't think it's wise to outright short the stock. The typical way that I do it is buying puts. You see here, there are options for the stock at 255 and 7.5. What I might be doing on Tuesday, if it's still trading around $8, I may try to see if I can find a peak in that and start buying 750 puts for June. May also look at the July ones. Now, these prices haven't been updated since approval happened and that the stock jumped. But it's going to be important to remember that a lot of volatility was built into the price of these puts before the approval was announced. So price should initially go down because that volatility now doesn't exist. Additionally, now that the stock has gone up, that will also drive down the price of these puts. But I think given that we have some historic data to support this, I think that the stock can come down from that $8 range. Now, if it does peak around 8, I would look for maybe $1.50 to $2 move. I think it could easily still stay above $4 to $5 range that it initially was in. But over the course of the long term, I think they will need to raise money. They'll need to get a sales force, and they may have some difficulty ultimately selling this drug.